Welcome back to Talking Shop with Property Bank. Today, I will share my personal investment experience. So to begin with, when I was in my early 20s, I tried commodities, I tried also Malaysian stocks, and then I tried also, of course, the Singapore blue chip stocks, which I still keep today. Yeah, and furthermore, as I went into my property career, properties is the first thing that I feel closely engaged with. So I started off looking into the REITs, which I invested in some REITs. And then along the way, as I go by, of course, we all have our first matrimonial home. And then that is the starting point of so-called real estate, not in the investment format, but more for you to have a roof over your head. And thereafter, of course, I meet along friends who said that they want to collect rental, and a next residential home becomes very natural as a form of investment. And for myself, I was busy raising my kids, and therefore that was not at the back of my mind. I was still very much into stocks. Yeah, but because work gets busy and I rarely have the chance to monitor my stocks, and sometimes I don't just want to take the words of my stockbrokers. So on a very safe mode, I was having this push factor into property investment when we have to relocate from our key point office. So that was my very first so-called office after the first one, which is a service office. So we had our fair share of work to do, like renovation, but there was a very nice sea view unit. And comes along because we need to relocate, and Burlington Square becomes our very first non-residential property investment. So today, I think I'm glad not just only to share with you my personal experience about property investment on non-residential. I'm also trying to think through, like you guys, because of ABSD, because of the higher taxes for the foreigners, you are thinking that what's next for you? Do you want to invest in stocks, shares? And for some of you out there, maybe crypto makes you the most amount of money. So whether are you someone who has time to monitor your investment or someone without that time to monitor your investment. So today, let's go into the decoding of non-residential properties. So you have us who's always on the lookout and also hand-holding our investors from the very beginner mode to someone who's already owned the very first non-residential properties. That comes the so-called management of that property, which that I've produced such contents out there at the beginning of our series about property management. But wait till we jump into that mode again. Let me welcome you, the friends out there. You have invested your very first residential home, and perhaps the next residential home, which is for investment and rental collection, or maybe for your children. So now we come to this non-residential property. So number one, have you ever thought about CPF and GST? So let's dive into that topic one by one. So let's start with CPF. Okay, so CPF is a so-called like a pension fund, but I think it's a very well-designed product by our Singapore government. In the meantime, before you retire, in fact, this ordinary account, we all know that you can make use of it for your housing needs. Well, then there's also the MediSave, and also can be used for education, especially if let's say you need to fund your children, so that can be used. So in fact, it's a very powerful tool for us. But on the other hand, for the non-residential properties, just be mindful that you cannot use CPF. However, in the past, this was something that CPF allows to be utilized for non-residential property if the balance tenure is 60 years. So in fact, I want to take this chance to appeal to the government. If you hear us out, or rather CPF board, In fact, many of our so-called SME bosses, right? Some of those that is like at HDB, shophouses, or even the industrial facilities, our local MIG enterprises, in fact, if they continue to pay rent and not own a property in a small business setup, it's always like there is rental increase through the years. So if after this YouTube you can consider to bring back CPF for non-residential properties just for business owners, I think that would be of great help. So like I said, back in history then, it was able to use to fund non-residential property. And in fact, one of my friends just exited from the Far East Shopping Centre en bloc, and she was utilizing CPF many years ago. So we are helping her to do some financial planning for her next property purchase. And this time round, for sure, she said she wants to invest in non-residential property. So what happens when you already invested in the past for CPF? Just like if you were to utilize the CPF in your residential or non-residential properties, it is alike. The theory is the same. You would have to pay back your interest to CPF board, because this is meant to actually cater for your retirement and based on the CPF interest rate. So as she calculated her sums, in fact, she is like kind of exit poorer, because she needs to actually top up the interest, and then this money goes back to CPF. So it's not a bad thing for investors out there, and for foreigners, the same level that you are on, because you currently cannot use your CPF for non-residential property purchase, which means to say that whatever that you're comfortable with, the cash outlay, and after talking to your bankers, you know that this is the sum of money that goes into the investment of your non-residential property. So the element itself that we calculate is something that you don't have to be too bothered about, returning back to the piggy bank. So after CPF, let's talk about GST. So for residential properties, you are not bothered about paying GST because it's tax exempt on GST. So what exactly is GST? So for foreigners out there, it's a goods and service tax, which means that you pay on whatever you consume plus the GST. But who has the right to collect GST? So the GST so-called collecting right is GST entities. That means companies who already register themselves as a GST registered company, and basically they are only a collector of this GST. So they don't go and consume the GST. So for example, if you are out in a restaurant, you realize that you have to pay on top of your meal and then plus the GST. This GST doesn't go to the restaurant. Similarly, what happens for non-residential properties is that a lot of you out there will think that if you are so used to buying residential property, suddenly there is this GST, which is quite a hefty sum of money, 9% currently. And that's like, you're talking about in millions of dollars, and that 9% is really a big sum. So in order for you to think about the so-called claiming back of GST, the only way to go about is to set up a GST registered company. So by making sure that it is in a structure, that means with a company, and you can have a few shareholders. So that means to say that, in fact, this GST ruling, if on the non-residential property from a seller who is a GST entity, you have to be mindful that you probably have to spend this sum of money, like pay your company secretary, file for your quarterly GST. All this can be a sum between about 1,800 to say 2,500, and if of course accounts is more complicated, it costs slightly more. So I think if you are on this road and you don't know what to do, you can talk to us. So namely to say, there's no benefit or penalty if you so-called set up the, in fact, benefit for setting up GST company is that you can claim back the GST. But what I'm trying to refer to is that as a collector of GST, this money doesn't go to you. So for you guys out there, if you have reached out to us to ask us your office question or your investment burning questions, we really appreciate you. So there is a subscriber who came to us and asked us about this question on, hey, I want to buy a property that is non-GST. Is it possible? Well, the answer is yes. If you have, the seller who is either under individual name or a seller which is a non-GST registered company, you do not need to pay GST on top of the purchase price. Well, the question is, number one is so simple to answer. But the number two question is that, hey, can you go and look around for me non-GST property to purchase? The end game for finding a non-residential property should not be just at that level that, hey, I just want to buy a non-GST registered property. But I think at the end of the day, it's really what's the yield, what are your exit plans, how much is it costing right now? So there's really a long list of questions that we are guiding this subscriber through. So if you are like this subscriber, please feel free to reach out to us at 8333-1338. If you like all our contents here, please be sure you give a like, subscribe to our channel, and definitely share this out amongst your investment friends. I'm also glad to let you know that we have this property investment seminar on the 27th of April, where the topic will be transiting from residential properties to non-residential properties investment. We will have this Q&A session with you as well. So there will be guided steps, and click the link in the description below to register with us. Registration is open. It's a Saturday at Singapore Land Tower. Remember to subscribe to our channel. See you